stock session for today. I'm going to go straight into the disclaimers, of course, the legal side of things, having a look at it. But today, of course, we are going through stock trades that we could be taking using our strategy and our technology that we use. Disclaimers are obviously there to let you guys know that everything we do is for demonstration purposes, to show you how we do it and how we use our technology. You can ignore it if you want to. You can mold it if you want to. You can take on some of it if you want to. It's up to you ultimately as a trader to decide what works best for you. So before we get started, let me explain a couple of places you can go if you need support or if you need help. So the first place you'll see is my email address. I think you can just about see it there, becky@tradictive.com. You'll also have here tradewithufos.com/Becky. Now let me go to that. So that link here will take you to this page. And from here, you can check out apps, courses, coaching, one-on-one coaching, different login areas, depending on what you have. If you scroll down, we'll be using this quite a bit today. This is our, well, for me in the Becky link, this is where I log all of my session notes. So all of the trades that we place in our stock sessions, you'll see them here and you'll be able to track profits, losses, why a small profit, why a small loss, why a small profit, why a small loss, why cancelled. If you scroll to the end, there are snapshots and notes that will explain why we've done certain things. So you can use this as a place to learn about why we would have cancelled a trade, why might we close out early or later, and explaining all of that. So a place that you can learn from here. We'll be using that today. If you scroll down further, then you've got different apps that we have, monthly and yearly, different platforms you can use it on. If you scroll down further, more information on top, Predictive Options Planner, which is our platform, and I will use that today as well as other platforms. And if you scroll down, you also got a question and answer section, which you might be able to learn from by reading other people's questions and the answers that have already been posted there. Or perhaps you've got a question that's unique and you can post it there and we'll answer it there as well. So lots of different places that you can go for help, lots of different resources, some of which are paid for, some of which are free, some of which are technology, some of which are support or courses. Have a look around, see what works best for you. You'll also notice at the bottom, if you are interested in foreign exchange trading, we do have a book that's been released. It's actually, I think, $3.88 minimum on Amazon. So if you get that, you also get free access to our FOREX course. And if you have access to the FOREX course, you'll also get free access for a certain amount of time to our apps. So it's actually a really cheap way around to get a lot of things related to Forex if you're interested in that. Alrighty, let's now crack on and have a look at some stock opportunities. Now, first and foremost, we are going to use the FX Street economic calendar to look at the news that's coming out and how it might affect us. So I'm going to filter by just US because we're going to be looking at US stocks, and I want to look at just high impact. I'll apply the filter there. Okay, now I'm also going to look for the next week or so, just to see if we were to get into trades today or maybe over to the start of next week, to see where or when we might expect some volatility. So towards the back end of next week, we've got some news coming out. Again, scheduled news. Of course, unscheduled news can come out as well that can increase volatility in the markets. But based on what we know at the moment, we've got news coming out towards the back end of next week, which may increase volatility in the US markets. So something to be aware of. For now, I think that's far enough away that we can place trades today and monitor as we go as to whether we cancel those trades before the news comes out, before we might see extra volatility. Okay, so we are going to use our top scanner just to help us look for different opportunities. By the way, if anybody's here with me live, I know sometimes people do join us live. If you have specific stocks or ETFs that you want me to look at, just let me know. Let me know the ticker symbol and I will go and have a look and we will spend some time picking that apart together. Otherwise, I'm going to go through our scanner that we use on top to find stocks that are hitting certain criteria. And then we will look into each of those stocks individually. We'll use top for our initial analysis, but then we'll use TradingView to place it. For those that are, of course, using TradingView, you can see that side of it. Okay, so I want to first look at, and I tend to prefer, just make sure we're looking at this, tend to prefer looking at these kind of, I must have put that on there last time, these kind of time frames when I'm trading stocks. Either with stock trading, we want to be in and out quickly by the end of the day, or slightly longer term over weeks to months, perhaps. Now, the reason for that, as far as I'm concerned, is because there is a daily gap. Every day, the stock market is closed for 2 times longer than what it is open for, meaning there are nearly every day, there's going to be a jump in where price is relative to where it closed the day before. That might increase our risk if we're trading on smaller timeframes. It might jump over our stop and then we risk more money. If we're in trades that we plan to hold for longer periods of time, so weeks to months, maybe even years, investments, and we're using bigger timeframes, that's less of an issue. And if we're in and out by the end of the day, also less of an issue. So I will prefer to look at position trading or above, or day trading or below timeframes. I'm actually today going to look at both. So we'll look at weekly first, see what we've got. And if we have time, we will look at day trading opportunities, although it is the end of the day on a Friday, or middle, I guess, of the US day on a Friday. So maybe we've missed the boat for some good day trading opportunities. They might tend to come around the open, but we'll have a look. Okay, so let's have a look at the ES, which is, of course, the futures contract that represents the S&P 500, which is the top 500 US stocks. The top 500 US stocks at the moment has a thin dot on alter climate, meaning, for those of you that have been following the markets, understandable, doesn't know what it's doing on a weekly chart. It does not have confirmed probabilities either up or down. Now, what that means is that we can look at either longs or shorts. So we looked at shorts last time, so I'm going to look at longs, unless anybody present in the room has any differing opinions as to what you'd like to do there. I will have a look at long opportunities. So we're going to look at our filters. We're looking at all US stocks, I think so, all stocks and ETFs. And we are going to look at, for a weekly chart, a confirmed up climate and ideally sensible. Let's scan that. If we have a long list, which we do, I'm going to make that even tighter and look at an early situation. Scan. Still a big list. Less of a big list. Okay, so now we have this list of stocks that fit the criteria that we're looking for. More than 300,000 in terms of volume, minimum average volume on a daily basis. We have a minimum price of $10. Maximum price, there's nothing in here that's too expensive. Of course, that's a relative term. What I'd ideally like to avoid are stocks that are worth thousands, because that, of course, makes it harder for people to manage their risk, put on the right amount of shares, or even be able to buy it in the first place. So I'd prefer to look at stocks that are slightly cheaper for that reason, but not too cheap, which is why we've got a minimum price of $10. We're looking at all US exchanges. We're looking at the all sector or group, and we're looking at all stocks and ETFs. I'm going to filter this by its symbol, and we're literally just going to go through one by one, see these opportunities. These opportunities are currently a confirmed upwards climate on the weekly, meaning for position trading opportunities, we have probability up in these markets. They are also to the start of that move up, which is typically better statistically, and they're close to an ideal trading price. Does that mean that we place every single trade? No, because they might not line up in other ways, but let's look. So we have thick blue dot, probability up, price is pretty much exactly at the EMA. The EMA is 143.25. So let us see if we have, I'm going to look across a few different timeframes here, Do we have any green UFOs around that price? Nope. Next trade. I'm doing this quickly so that we can get through the list and hopefully get through to day traders, day trading opportunities potentially. So if that was too quick, if you're watching recorded, then you can obviously pause it and have a look at each of those markets I looked at to see what I am crossing out. If you are new to this, then of course it might take longer to understand what we're looking at here. I won't obviously explain the entire methodology in depth. That would take days. So I will do my best to explain what we're looking at as we're looking at it when we see an opportunity. But in terms of if I don't see an opportunity, I'm just going to quickly scan through and move on if we can. So nothing there, nothing there, nothing there. Okay, we'll keep going. And hey, we might get to the end of the list and there's nothing for us. So we'll look at a different time frame. I'd like to get into a trade on this one because we're also in weekly buyers right now. So that would be a good place to be. But unfortunately, no green UFOs on the right-hand side, no buyers on our smaller time frame that would be looking at that. So 2607, let's have a look. Sellers actually on that chart on the right-hand side. And it might be if we don't actually find any situations that line up for buyers, maybe that's telling us that we're looking in the wrong direction, right? Nothing there. Close, but nothing there. Sometimes when we do this, every single stock on the list has got an opportunity. Some cases, like today, might be none of them, but we will see. Okay, nothing on that one either. Again, it'd be great to get into something here because we've got lining up on different time frames. Perhaps. And nothing there. The EMA price is not falling within buyers on the right-hand side. So the EMA price on the left-hand side for our weekly time frame is not falling within buyers on our smaller time frame. And we're skating through a few to find opportunities. Now we have one. Let's just check the 144. Okay, one day. Lovely. Got an opportunity. Let me explain quickly why. Thick blue dot, probability up. Our EMA price, which at the moment, because price is above the EMA, is likely to bring in buyers if price were to move down and hit it. That's at 31.96, which is snugly within this top UFO. We're actually going to take both UFOs together if we can, if we've got room to take it there. Let me just do some quick maths on this. So we've got 32.39 would be the entry. Our stop loss will be 28.42. That is $3.97. Oh, we can just take this. What I'm looking at here is the fact that we have lots of sellers. This is what this red UFO is showing us. Lots of sellers on a weekly chart at this point. So we wouldn't want to place a trade trying to take it to the upside if close to us we have a lot of sellers. Just so happens, even if we put these two together, we do have the room to take it 1-to-1, which for me is enough. So what I'm going to do, I'm going to bring in this sheet. This filters through to what I showed you at the start, which is where we have, it's November the 4th, isn't it? Where we have our session notes. So I'm just going to put it in here. So we've got 1 week on the left and we've got a 1 day on the right. We are going long. Entry of 32.39, stop loss of 28.42. So that's where I'm taking this number and taking off 10 cents. Our safety target is figured out for us at 36.36. Our final target would be 36.78, which is just over a 1-to-1 away. Good enough for me to place the trade. So let's bring up TradingView and we will put this in. Nice. So I'm going to draw it on the chart just because I like to see visually what we've got going on. It makes it easier for me to come back later and check what's happening, where we're at. Okay, so that's the entry and stop loss prices. Just double check I got that right. 32. Yep. Okay, nice. So the safety target was already figured out for us by spreadsheets, maths. As much as I can get my maths done for me, the better. One of the reasons why I like using TradingView personally. I find it very easy to use in that way. It does a lot of maths for me, which is great. Of course, you can program it yourself into a spreadsheet if you'd like to. Okay, so now I've got it visually on the chart. I'm just going to place the trade. So buying 32.39. Stop loss is 28.42. So if you were risking one share, then it is $3.97 per share in terms of risk. So that's one half of the trade in. I'm just going to cancel that actually because I did something wrong. Cancel that. I'll explain what I did wrong. So entry price, stop loss is the same. If you were risking one share, then it's $3.97. I'm just going to put it as a $50 risk. That'll round it down to, of course, it'll be 12 shares and therefore 40 something dollars of risk. Just to show what you might do if, in this case, I'm assuming that the plan would be to risk $100 maximum per trade. And so all you do is put in your $50 risk either side, obviously adding up to $100. It will then work out for you the units and it will round it down, of course, to the closest unit, which in this case is per share. So all you do is put in half of your risk, total risk that you want to risk per trade, half of your risk per each half of the trade. And then you know that in terms of money, you are not risking any more than that. It will also tell you, by the way, if we put this in, it should also tell you order info. We have a look down here. It will tell you the trade value. So what that means, what you need in your account in order to place that trade. Okay. Oh. There we go. Come back down. Brilliant. So let's just cancel that because we don't want to put another trade on. Let's go back to top and find some more opportunities. So we've placed one so far. Let's keep going until we run out. And then if we've got time, we will look at some day trading opportunities if we can. EQC. I'm just going to wait for this to finish loading because we've got an opportunity here. We've got our EMA does fall within these UFOs again. Unfortunately, we're going to have to clump them together, which makes the risk slightly bigger, but I think we'd have room to take it to our profit target, which is fine. At the moment, it's not loaded very many bars. I'm just going to make sure. Okay, that's a lot. That's probably why it's taking a while. The reason why I was waiting for that to load, and I'm still, I think 500 bars should be enough actually, is because at the top right hand side of the chart, once it's here, you will see there's a number, in this case 59.43%. That tells us, in a nutshell, you can watch some sharpening videos on this to understand exactly what this means and how it's calculated, but more or less tells us the probability rating of the UFOs. My rule as we do these sessions is no less than 50%. So on 144, the 144-minute chart, we've got a 59% probability. Let's just quickly look, see if we've got opportunity on other time frames that might have a better number. Doesn't look like it. So the 144 is what we're doing, and let's put that on. So November 4th, EQC, 1 week and 144. We're going long. Entry price 25.69. Stop loss price 24.68. So it's that smaller number here, take off 10 cents. And our final target is 27.19, which again, I think is 1.5-ish to 1. So not a lot of profit. If we're right on this, on both of these trades, not going to make millions, but profits are profits. And we want to make sure that they are more than 1-to-1 to make it worth the risk, essentially. Okay, so let's draw this in. 24.68 to 24.6. Oh, sorry, 24.68 is the stop, so it's 25.69. The entry, lovely. The safety target is 26.7, and the final target is 27.19. There we go, lovely. So again, we can see that nice and clear there. 25.69, stop loss 24.68. So if you were risking one share, that is $1.01 of risk per trade, or per half of the trade. Again, I'm going to put in $50 just as an example. You guys risk whatever you risk, or don't risk anything, right? Don't place the trade. You've got to only place trades if it fits your trade plan, your risk parameters, what makes sense to you. It's your money, right? So you've got to do what works best for you. You may decide that some of these trades are risking not a lot compared to what you want to risk, or way more than what you want to risk, or don't fit your trade parameters anyway. Because maybe you use other indicators, or maybe you look at fundamentals as well, and it's not hitting certain criteria for you to take the trade. So take this as it's intended, which is an example of how you could do this. That's why I do $50, $50. In no way saying that you should. Just remembered I didn't do this on the last trade that we looked at, so I'm going to put it on for this one and the next one. So 1 week, and it was 144. But it just gives me, again, makes it easier, and I would recommend to you guys, put notes on the chart. It makes it so much easier to remember what's going on without needing to continue to double check everything that you're doing. It will be on the chart for you without you needing to keep looking back at a spreadsheet, but as well, keep a spreadsheet. It will help you over time. If I bring this in, just to show you what I mean, will help you over time once you've got a spreadsheet and you've got enough data, which, by the way, should be hundreds of trades worth. Back testing makes that a really efficient thing to do and collect. You might look at timeframes as a differentiator and say, were there timeframes that did better for me than other timeframes? Or, I don't know, my risk to reward, did that make a huge difference on my profitability? Or as in how likely I was to win, or not really, in which case should I change around my risk to reward? So you can use this data that we have here. Just make sure that that's the same as the other ones. There we go. Use the data that we have here in order to, that's annoying me now. You see that line underneath R2R is slightly less bold. That's annoying. But anyway, you can use the data to be able to figure out what's working for you better, what's causing more of your profits, and what's causing more of your losses, so that you can tweak your plan as you go. So do keep a spreadsheet, as well as, I think, place something on the chart as well, so it's easy to keep on top of. Alrighty, so where were we? FCF 13.85. Maybe here on the daily. Looks like we have one on the daily. Okay, so we started off slow looking through our list, but we've ended up with a lot more opportunity. EMA is at 13.85, nice and snug in this UFO. We've got more than 50% probability. So let's place the trade. Just going to off screen here. Obviously, I've got my spreadsheet, so I'm just going to put it in here quick, rather than keep filling it in and moving it back and forth. 13.98 through to 13.66. It's a small risk, making it easier for us to hit our safety target, of course. The further price has to move to be profitable for us as a trade, the less likely that is to happen, right? Price only has to move a small way in our favor for us to get out at a profit, then the better. But of course, in order for us to get a bigger profit, we want to, so it's 13.8 to 13.66. So this area here, the further the profit, the more money we make when we're right, and it makes the risk more justifiable. But the closer it is, or the easier it is to reach, then in theory, the more profitable trades we have. You're going to have to sacrifice one for the other normally in order to make that balance. But either way, it's balancing it in the way that makes you money, right? That's the point. Again, I've said this many times before, but there will be 15.03. There will be some that would say, I'd rather be right 80% of the time and take 0.5% every time. There will be others that will say, I'm okay to be wrong many times in a row if I risk 1% to make 10%. So when I'm right, I make 10% and I make a lot of money. And I'm fine to lose a few times in a row to hit that. There will be others that say the opposite. Say if I risk 1%, I want to make 0.5% because then I can be right loads of times in a row. Great. Either way, absolutely fine. It will be what is psychologically easier for you, what is financially easier for you, what makes the most sense for you. Neither one is right or wrong. One of them might make more money than the other overall, but it doesn't matter. If one of them makes you very uncomfortable, you probably won't do it consistently, which means you're not being objective with what you're doing in the markets. You won't be consistent. So your results won't be consistent. But if you figure out the way that makes the most sense for you based on your risk tolerance and the way you are, what fits your plan, then you're much more likely to consistently enact it and therefore get consistent results. Whether those be consistent profits or not, but at least if you have consistent results, you can analyze them based on actual data that makes sense and then figure out where you're going wrong, rather than sometimes doing this and sometimes doing that and not really knowing why or not following any kind of consistency. So placed 4th November 2022 on 1 week and 1 day. Lovely. That's the third trade of the day. Coming back here. We'll keep going. We've still got a reasonable list to get through. I'd like to get through the entire list before we look at day trading, but let's have a look. Okay, nothing there. Maybe something here. We're going to wait for that to load and see what that number becomes. Just realised I have a T next to me, which I've not touched. Okay, so that's now gone to less than 50%. So we're not trading it. The 1 day had nothing. 2 day doesn't have a big enough number there. Okay, this should work. Should just work. Maybe not. Let's do some quick maths. So unfortunately, again, we'd have to bunch these all together because they're very close to each other. We want our stop loss to fall in white space, not within buyers. So the entry would be 1107 pretty much at market rate. It's 1108 right now. Stop loss would have to be 7.51. So the safety target, safety target becomes 14.63. Final target is 17.62. So it does work. Again, it means that you're looking at quite a wide risk. We're also within weekly buyers, although weirdly those weekly buyers are a smaller range than what we have here. So I'd still rather take the wider range because we can see that that's where we have buyers. So why would we ignore that? So let me place this one. So what I thought might be a slow day today, and now we've got a few different, it's a 3-day chart we're looking at here, quite a few different trades that we're looking at. So let's go and have a look. Gel. My auntie is called Gel. We call her Gel. So just thinking of her as I place this trade. But this is quite a wide area, isn't it? So we are going from 1107 to 1. Safety target, again, you can see that's quite wide, right? It's because we're grouping it together. We're taking buyers plus buyers plus buyers. So the safety target, 14.63. Final target, squish this one. It'll be easier to squish the bigger time frame. Up here, not that far, 17.62. Yeah. Nice. Okay, let's place the trade. Okay, that's one. And 17.62. That's 2. Lovely. So placed 4th of November, 1 week and 3 days. Lovely. Okay, great. Let's come back and have another look. Ironwood. Sounds masculine. Okay, so the EMA is at 10.78. So let's have a look. Yeah. And you could argue with some of these that we could be close to them. But for today, I'd rather just look at ones that are actually there. Like this one, for example. Let's check the 3-day. One was better. This one. So the 3-day has a 53% probability. And yes, the EMA lines up. On the 2-day, the EMA lines up as well, and it has a 57% probability. So let's be as objective as we can. We are placing trades that have the highest chance of working out for us. Not to say they will, but at least they have a higher chance. So 1770 through to, again, we're going to have to lump these together. Reason for it is because although there's a bit of space there, I usually give a 10-cent wiggle room. 10-cent wiggle room takes us to 16.86, which is just where more buyers start. So we're going to have to take that second number of 16.41 minus 10. Final target is 21.85. It's just under a 3-to-1 if we were right for the second half of the trade. Okay, nice. Let's do this again. 1770 through to 1631. Again, looks quite wide because we're taking a few together. We are looking at 19.09 for the first target, and we are looking at 21.85 for the second target. Relatively straightforward today so far. We've had no trailing stops or anything like that. We've just seen it's lining up, and it's lining up. We place the trade. Now, just to say, you would not, very likely, very unlikely, that you would be placing every single one of these trades. And why? Risk, right? If we are placing longs on US stocks and we place 10 of them, we risk 1% each, we are essentially risking 10% of our account on going long on stocks. Now, if you want to risk that, fine. But if you are trying to diversify and maybe you trade certain stocks, maybe you also want to invest or trade in ETFs of different things, maybe of commodities or bonds or things that have nothing to do with the stock market, or, you know, at least not like an ETF of the SPY or something like that. If you are if you have a huge account and you can keep your risk percentage to a minimum by the amount of shares that you trade in each of these, then by all means, I guess you could place all of these trades. We're doing all of them with the intention that you guys will pick, if any, the trades that suit you best and that you want to be placing. So you might have certain criteria. That means that you might pick some of the trades that we've gone through, but not all of them. And the reason for that is because if you place all of them, then you're increasing your risk. Every time you place another trade on the US stock market going long, you're increasing exposure to the same direction of the same asset, just a smaller bit of it, right? So I wouldn't recommend that place all of the trades. But ultimately, like we say, up to you. If you want to, go for it. All right, 45.6. Right, nothing there. $28.6. We have one here, but I'm just going to wait for this to finish loading so that we've got an accurate number. Because at the moment, it's giving me 50% based on this set of data. 49.19%, close but no cigar. Although we have our EMA just in here, don't have a high enough number on that, so no trade. Looking at the next market now. So again, you might have criteria like that number needs to be 60% or 70% or whatever in order for you to place the trade. So you might be stricter on some of these rules than we are. Is definitely fine. Nothing wrong with that at all. That mean that you place less trades than we would. Or you might do the opposite, right? You might say, oh no, as long as that's 30%, it's fine because my risk to reward balances that out. Okay, cool. That's up to you, right? It's whatever makes the most sense to you. The stricter you are, i.e. the more rules you have or the more criteria it needs to fit, or the better the criteria it needs to fit, the less trading opportunities you're going to have. But in theory, you're going to have a higher rate of being right. So you're going to be more likely to have a profitable trade. Not necessarily a high profit from those trades, but more likely to have a profitable trade. Versus if you are less strict, then your trades are less likely to work out because your criteria is less strict. There are less probabilities that have to line up before you place a trade, but you'll have lots more opportunities. Just cross that. So I don't think we'll find one. 81.88. Let's see. Oh. So, as I'm saying, it's always up to us to decide. Do we want to be stricter or less strict? Do we want to shoot for being right more often, but lacking a reward to risk ratio? Or are we okay to be right less often, but make more when we're right? Do we want to find some balance in between that? And if so, what kind of balance is the best one? And how is that going to work for us? Okay, so it looks like we've got one here, Ryman Hospitalities. At market, looks like it. Our EMA is within here. We've got more than a 50% chance that the UFO works based on the criteria that we use for it. I do this in terms of works because I know that's a vague term. To say it works, what does that mean? It means it moves a little bit. Does it move by a certain amount of ticks or pips or cents? Does it move by a certain percentage, right? So for us, what works means in this case is that it will hit the next UFO, the next opposing UFO, which could be any amount of cents or percentages away. Could be really far away, or it could be really, really close. So based on how far away those UFOs are will depend on the profitability that is equated to that number. But this is the probability that price goes from here to here, or from here to here. So that's what it's basing it off of. But it essentially gives us a ballpark to look at as to the probability rating, more or less, of that market and time frame. So 83.13 to 71.63. So on this one, we didn't have any red UFO on the left-hand side. So what that means is that we don't have sellers on a weekly chart that we can see. It doesn't mean that they're not there or that they won't come in. It's just to say, actually, just to say that they don't exist at the moment. We can't see them. They're not showing themselves, shall we say. And so if we have no sellers on the bigger time frame, which is usually where we use as evidence to get out of the trade, if we don't have that, then in theory, we have no evidence to get out of the trade just yet. So we'll stay in it. We'll have our safety target to protect us. That means that if we're right a little bit, then price goes against us, we break even, no harm, no foul. If we are right a lot, price goes in our favor, then what we would do is close the trade out whenever, based on if the auto climate changes, or if we see new green UFOs formed on the way up, then we put our stop loss behind that. And so what that gives us is room to take it as far as it wants to go, with rules to lock in our profits as we go. And if we are wrong, then it's just the same as any other trade. It would be a flat stop out. If we're right a little bit and then it goes against us, we break even, but we've got room to take this. Again, this is where things like this become important to place notes. So placed on the 4th of November 2022, it was a 1 week, 3 days. And in this case, target 2 was trailing. Because if I come back to this in a few weeks' time, or tomorrow, or maybe not tomorrow, it'll be Saturday, but next trading day, and I've placed loads of trades, and maybe I'm also trading Forex, and I'm also working, or I'm also whatever, whatever people do. You might be with your families or busy. You come and look at this, you've got nothing on the chart, and you go, where's my second target? And you have to go and figure it out again. Oh yeah, it's because I didn't have sellers on that time frame. In this case, it's just on the chart already, so no confusions. Alrighty, let's see with this one. 993, very, very close, but I'm going to stick to my guns here and say it's got to be within it right now. The 2 days looking good, right? 60%. I think that's the highest number we've seen so far. We've got room to take it up. Let's see, 62% from our daily chart. And again, annoyingly, we'd have to bunch all of these together, but we've got the room to do it. In fact, actually, that essentially becomes the entire weekly UFO. And that one's too far away. So the daily, let's put this in. We are now on our 7th trade of the day so far. And here's me thinking it'd be slow and we wouldn't find anything when we first were looking. One day long. 991 through to 871. Final target is 1180. Which 1.5 to 1. Looks like more than that to me, eyeballing it, but can't argue with the maths. That's why we do things, we try to do things as objectively as we can, using maths, not using our eyeballs, because human eyeballs aren't necessarily the most accurate in the world. Oh. There you go. It's down here somewhere. I think maybe that whole area. So 991. Look at that. exactly. Through to 871. Bit off on that one. Nice. Okay, so again, a wide area because we put all those UFOs together. It means price has to go further to hit our safety target. So what I mean by that, just quickly, is if my stop loss were here, then my safety target would only need to be here. So if price moved in and then moved in my favor, it's only got to move a shorter distance before I make a profit. If my stop loss is wider, like it is now, then price has to go further to hit my safety target because the safety target is a mechanical 1-to-1 always. And it's a 1-to-1 for a reason, because it helps us mathematically. If we hit that and then hit our stop loss, then we've made half the trade, then we lose half the trade, we break even. It's deliberately there to make it a break-even protection, which means that if we're right a little bit but not right a lot, we don't lose. That's what that does. Now, if we're right a lot, then what this actually does is overall reduce our reward to risk ratio. But in our methodology, we are happy to do that. We kind of justify that by the fact that it protects us against more losses. You are less likely to lose by having this kind of strategy in place. But you're also less likely to make large profits when you're right, because you've taken off half the trade early. Pros and cons, again, it's going to depend on you. You might choose not to have a safety target at all. You might choose to have a safety target closer to you or further away from you or whatever. Whatever you think works based on your trade plan. 1 week and 1 day. Lovely. Great. So we have now placed 7 trades, I said? 1, 2, 3. Yep, 7. So I think we got to the end of the list, didn't we? No, we didn't. We've got 4 more. Apologies for that. Looks like time-wise, depending on the opportunities we have, which again, we have another one here. So looks like time-wise, we might just be able to do some position trading today and not day trading. I'll be honest, personally, I am not a day trader. I trade. I don't day trade. For me, it's not something that works out alongside my psychology or my availability. So I don't day trade. Not to say that you shouldn't, not to say that you can't. There are obviously lots of people that do very well day trading. And of course, if you enjoy it, if it suits you, then great, crack on, continue to do that. For me, as I said, I will usually decide to do position trading with stocks. And even with Forex, I'm usually a swing trader with Forex. I prefer the bigger, longer time frames so that I have time to be disorganized, basically, my personality. Here, where will our final target be? No final target by the looks of it. So we're going to trail in. Okay. Nice. So for me, just to expand on that, I'm not necessarily a person that's very good at the discipline to sit down at the same time every day. My lifestyle, I did travel a lot. Obviously, COVID stopped that a little bit. I'm back to traveling a bit more, which means I can't always guarantee that I'm going to be able to sit down at the same time of day every day, or the same time of day even every week, because I'm more likely, I wrote that down wrong, must have, 34.23. That makes more sense. So because I'm not likely to be able to be consistent with my application of it, even if I might backtest and find out that particular strategy or methodology or tweaks of here or there might work well for me, if I'm not actually going to sit down at the same time every day and be able to monitor it throughout that day or throughout those hours, if I'm not able to do that, then there's no point doing it. In my past as a trader, I'd say, oh, if I can do 2 or 3 trades a week and be profitable, what if I could do 2 or 3 trades a day? You know, what would that do? And it just didn't work out for me because I wasn't enacting the strategy in the way it needed to be done, in the way that day trading really demands of you. If you are somebody that can say, every day, 8 a.m., I'm checking my trade, and then at 10 a.m., I am managing that trade, and I make sure I close out by 12, and you can do that every day, great. The time doesn't actually matter, by the way. That was just an example. Could be any other time. Of course, if you're trading stocks within that stock market, wherever you are in the world, within that stock market's opening hours. So again, not to say that you have to do those times, but it's just to give you an example of if you're all over the place like me and your ability to commit to a certain time in a consistent fashion isn't there, probably don't day trade. Probably not the best thing for you to do. If you can be consistent in that, brilliant, and do that. Also psychologically, if you're okay with winning and losing quickly, again, good. If you're not, and it's fine not to be, there we go. So that's the 8th trade of the day. Let's now see if we can get one more in. So for me anyway, as I was saying, I prefer personally to position trade stocks anyway. So for me, I find that we've just done this and looked at this. I will in time, if I have the opportunity to time-wise, show some day trading examples. How would this be applied to day trading for those of you that want to? So we can do that for sure. But as I said, if you're going to day trade, make sure you're actually capable of doing it. Okay, so we've got an opportunity on the 144 here. So that's a 64% probability. Okay, nice. So the 144 worked out the best. Let's do that. And based on time, this will likely be the last trade of the day. Okay, so entry 33.90, stop loss 33.78. Final target, trailing. Again, we don't have any sellers, so we can't give that a number. We've just got to let it ride. If we're right, if price does turn from that area, then we let it ride. That'd be great. This here, it's an interesting arc. You can often see price do things like that. So we took a real shot up here and then it kind of calmed down. But hey, probability up. So we'll place the trade. No idea where the entry price was here. 33.9 through to 33.78. So it's a small little area there compared to the other things that we've looked at. Safety target is 34.02. Place that in. And of course, as we saw, or as we said, second target in this case is going to be trailing. There's only 12 cents of risk per share on this one. And really, the lower that risk, the more room we've got to put more or less shares on them. But of course, the price of the stock itself, depending on if you are day trading and you're using any leverage or not, will depend on the ability to place the trade as well. Okay, so placed 4th of November 2022. It was a 1 week and a 144 minute and target 2 trade. Lovely. So just to show you, tradewithufos.com/Becky, refresh it, and you will see we now have, we go to the end here, all of those trades that we put in today, all 9 of them. So it's going to count for me. 9, there you go. All 9 trades that we put on today are there. You can see the entries, the stops, the targets. You can use this session, of course, to understand why we did that. Again, this is not to say you should place these trades. It's an example of trades that you could place using our technology, using our methodology. Again, like I said, you wouldn't necessarily want to place all these trades because you are increasing your risk every time you do that in the same asset class, in the same direction. So again, you might apply different things on top to be more specific about what you do. Or you might place a hell of a lot more trades than we would. It's, again, your choice. You can use this link as well for looking into apps, courses, coaching, into questions and answers. You can also email me at becky@tradective.com. So if you need any help, hopefully you know where to go. Hopefully this was helpful, and I will see you soon. Take care. Bye-bye.